Welcome back to another video. Let's talk about AMC and GameStop. There's big ETFs here joining in the action. GameStop and AMC are both heavy hitters on some ETFs that professionals are including into their portfolio. So let's take a look at this. The Wall Street Journal just released this article this morning. Meet the ETF portfolio managers trying their luck with meme stocks, AMC and GameStop. So now these stocks are being adopted by high-profile investment managers. Some stock pickers are embracing a high-risk approach for traditionally low-risk exchange-traded funds. So this is very interesting, and I think you guys are going to like this. Some brand new exchange traded funds are dabbling in meme stocks, chasing returns in a bid to pull in assets. Shares of GameStop Corp, AMC Entertainment Holdings Inc., and BlackBerry Ltd. have surged this year on the back of individual investors who talk up their trades on social media. Yeah, Wall Street bets, baby. Let's go. Many professional stock pickers have largely sat out in the mania, of course, but we're winning, with some on Wall Street like Morgan Stanley chief executive James Gorman calling the dramatic run-up in share prices dangerous. Okay, but profitable in my book. Still, a few actively managed ETFs are trying to surf the retail meme stock mania, gambling on their ability to get out in time once a rally eventually fizzles, including the Kraft AI Enhanced US Next Value ETF and Principles Financial Group Inc.'s US Small Cap Adaptive Multi-Factor ETF. It's a big risk, analysts say. Investors from multi-billion-dollar hedge funds managers to individual traders often come up short in timing trades. Many get into a rally stock too late or cut out after losses have started accumulating. So they included a chart here. Meme funds. Some ETFs are trading shares of GameStop and AMC, scoring gains along the way. So these are some of the ETFs that have AMC, both AMC and GameStop, and these are some of their gains for the year. Fund and index performance year to date. We have Cambria Shareholder Yield ETF. We have Kraft AI Enhanced US Next Value ETF, S&P 500, Principal US Small Cap Adaptive Multi-Factor ETF. We have here Cambria being the clear leader here at 40% practically here, 38.6% year to date on positive returns. And then we have Kraft second here, year to date up about 18%. The S&P 500 here up about 11%, and Principles being the last one here, pretty much flat at this point. The positive momentum of these volatile securities could be short-lived, said Todd Rosenbluth, head of ETF and mutual fund research at CFRA. New actively managed ETF strong performance out of the gate can help garner investors' interest in increasingly crowded markets, but such demand may disappear if losses pile up, he said. Kraft launched its fund in December, while Principal started trading last month. With more than 2,000 ETFs in the U.S. alone, funds face stiff competition in enticing investors. Funds usually take as much as 5 years to reach $100 million in assets, the threshold they need to meet to stay in business, analysts say. Many funds failed to reach the market and eventually shut down. One reliable way of appealing to investors is by posting eye-popping returns. Kraft's $5.6 million ETF relies on artificial intelligence to screen for value stock based on intangible assets such as intellectual property, and it tries to predict which will have the best performance over the next month. The AI's monthly 100 top picks have recently included GameStop and AMC. So now we have AI, we have ETFs, and we have people scouring big funds for stocks like AMC and GameStop. They're acknowledging that they're out of the game. They're not actualizing these gains, and there's a lot of momentum behind these stocks, and there's a lot of money to be made. So now they're being eyed by big funds and institutions and artificial intelligence. This is great because this just adds to the massive squeeze that is accumulating, but we also have big power and money behind the stock. Our AI model is based on increased probabilities, said Francis Gisak, a managing director at Kraft. So we are betting on that probability. Just like human funds managers, AI-powered funds can also struggle with timing. Kraft's AI traded in and out of GameStop over February, March, and April, exposing the fund to losses while missing out on some gains, according to FactSet. In June, the fund added AMC to its roster and held on to GameStop. Shares on the Kraft fund are up 19% so far this year versus 11% for the S&P 500. We've had trial and errors, Mr. Gisak added. Rather than letting a robot do the heavy lifting, the fund managers of Principal's $6.3 million small cap adaptive multi-factor ETF take a more quantitative approach towards portfolio building. Yet the end result isn't much different. GameStop is the ETF's top holding. Principal's ETF selects and weighs stocks based on several factors, such as value, quality, momentum, and low volatility, as well as how risky the overall markets seem. The fund's active component rests in portfolio managers' ability to rebalance as often as needed, unlike many other quant funds, which tend to rebalance on a schedule. Fund manager Jeff Schwartz says GameStop is a fund's top holding because it is the largest component in the S&P Small Cap 600 index, where we see high idiosyncratic risk not explained by traditional anomalies in the market. We've give investors a full market cap weight of the name in our portfolio, Mr. Schwartz said. The fund is flat since it launched on May 19, as many of its holdings value stocks have fallen in recent sessions, including GameStop, which is down nearly 4% for June. To be sure, GameStop and AMC featured in dozens of other ETFs, most of which are passive. AMC and GameStop are some of the biggest stocks in the Russell 2000, for instance, making them heavyweights in the $68 billion iShares Russell 2000 ETF. So now we're seeing AMC and GameStop not only being a meme stock, but also being adopted by big funds, ETFs, and acknowledging their weight in these big ETFs. So positive momentum for these stocks and longevity since they are part of these ETFs. Active managers, however, have great control over their entry and exit points, as well as how much exposure they have to a single stock. Meb Faber of Cambria Investment Management LP is a rare active ETF manager who got in and out of GameStop early after recognizing the potential dangers of the rally. Well, I'm sure he missed out on a lot of gains. Mr. Faber says he followed rules he had set for the fund dictating how much exposure it can have to any one stock. The ETF started selling shares of GameStop back during January's run-up, unwinding a position the fund had held since 2013, long before the video game retailer had become the focal point of amateur traders. Come on, guys. That was not necessary. The fund, which focuses on companies returning the most cash to shareholders, is currently up 38% so far this year, making it one of the best performing ETFs of 2021. Assets sit at nearly $350 million, with Cambria pulling $224 million so far this year, according to FactSet. Not selling would have been foolish in introspect, Mr. Faber said. It would have been 30% of the fund. That's not what people are buying into. So that pretty much sums up the article. So concluding, there's a lot of different perspectives here with these fund managers and quant AI traders. But the point of the story in this article that brings a lot of excitement is that they're acknowledging the power of these stocks and they're acknowledging the longevity. Some are selling early, some are using other AI quantitative measures. But the end result of this story is that they are part of the bigger picture of major ETFs and they're not going anywhere in the short term. They are here to stay. And there's a lot of money being thrown at these stocks and there's a lot of potential. So now we have an opposition of people shorting the stock and continuously shorting the stock while we have these stocks in major ETFs and major funds and people looking into it. So not only is retail winning, but now we have funds jumping on the bandwagon. And that's pretty much it for today. I hope you guys enjoyed this video. If you guys did, make sure to hit the like button and subscribe buttons down below. And I'll catch you guys on the next one.